Hi everyone, welcome back to Be Rich. Further continuation to our market capitalization video, I thought I'll ask Anand to explain four or five important other metrics you should consider when you're buying a company or a share. Just not the market capitalization. There are four more important things, and maybe Anand will add more to those four things. These things are the price to earning, price to free cash flow, price to book value, and earnings before interest, tax, and depreciation and amortization. So I thought Anand can touch upon each one and explain what it is and why it's important. Let's start with price to earning ratio. Anand.
Pri- Price is what you pay, value is what you get. So you take the total profit of the company divided by the total number of shares. You get what is known as earnings per share.
Hmm.
And how many times earnings, how many years earnings you are willing to pay to buy the stock.
Hmm.
If the profit of the company does not grow, assume that the profit does not grow
Hmm.
and the EPS is 20 rupees no ago.
Correct. Earnings per share.
And and 20 years later it is still 20 rupees no ago.
Hmm. There's no growth.
That's no growth. How much are you willing to pay for that share? How much are you willing to pay today to get the next for in eternity the 20 rupees? So you discount
Correct.
the cash flow. You
Hmm.
discount the cash flow and arrive at a price.
Correct.
This is the how a bank will do it. This is how a private investor will do it. This method is called as the discounted cash flow method. But what is the rate at which you will discount?
Hmm.
There are several rates available. The rate at which government of India borrows, that is the cheapest
Hmm.
rate.
Hmm.
You can borrow at what is the rate at which I can borrow from the market.
Hmm.
The higher the rate, the lower the value.
Hmm. Correct.
So what will happen is this is how banks do it. This is
Hmm.
an imperfect model because over 20 years there will be many rates. The rates will keep going up and down.
Correct.
So what is the discount rate to apply?
Correct.
And
How do
this
you
is by
come?
discount. How do I know for next 10 years this is the discount rate I should apply?
Hmm.
And then what is my and how much below that should I buy so that I get margin of safety?
Correct. These are things to consider before investing into a company.
So this is basically how this PE ratio decides. So the
Correct.
higher the PE ratio, you expect the company to grow at a great speed
Correct. To recover that, yes.
to recover that money. Now I read an article, I'll give you an example. Suppose
Hmm.
there's a FMCG company.
Hmm.
This is 60 times earnings.
Hmm.
And if this is 60 times earnings, let's assume that for calculation to understand easily, we will
Hmm.
do 50 times earnings.
Hmm.
The earnings is 2 rupees today.
Hmm.
The earnings is 2 rupees
It's two
today.
rupees today.
And and you have paid 100 rupees to buy the two. At 50 times earnings, you have paid 100 rupees.
Correct.
Now assume that the company is growing between 10% every year for the next 10 years.
Hmm.
Then PE becomes 16 into 2 rupees becomes 16 rupees at the end of the period. If
Correct.
it keeps growing at 10%, you calculate to be at 16 rupees.
Hmm.
Assume that the PE has corrected and the company has gone out of favor and you get
Hmm.
20 PE. You will get
Hmm.
only 320 rupees.
Correct.
So I paid 100 and after 10 years I am getting 320. The
Hmm.
average rate of return is only 5%.
Very true.
I think it's 20 years, sorry. This will take 20 years. At
20
end
years.
of
Correct.
20 years, it is 20 years. So at the end of 20 years, I get only 320.
Correct.
But now assume I buy it for 25 rupees.
Hmm.
Instead of two times earnings,
You're
I'm
buying
able to
at
pay cheaper. I'm buying at instead of 50 times earnings, I'm buying
hmm.
it at 10 times earnings to Mexico. The
Hmm.
initial price instead of 100 rupees comes down to 20 rupees,
Hmm. Correct.
right? If I
Hmm.
buy it at 10 times earnings, it comes to 20 rupees.
Hmm.
So 20 rupees goes to 320 rupees. 100
Hmm.
will also be 320. If I pay 100 also, I'll get 320. If I pay 20 also, I'll get 320.
Hmm.
So for a company that's earning 2 rupees, whether to pay 100 rupees or whether to pay 20 rupees is the question.
Hmm.
In the
Correct.
case of in the case of ITC, when I recommended, In 2 rupees stock, I paid 25 rupees and the company is
Yes.
going at 10%. So there's a good chance my 25 rupees will become 320 rupees.
Very true.
And
Very, very true.
the market realized it immediately. And that's why the jump has been very fast. It's now
Yes.
360. I've
Yes. A
already
recovery
tripled
in,
my money. The
yes.
recovery in PE has been great because they're saying market is saying no, no, we cannot give it at 20 rupees. We cannot give it to you at this price anymore.
We can't discount you for this one.
We can't discount you, but it was discounting, so I bought it at that price.
True.
Because it was discounting 12 times, I bought it 24. Now the
Correct.
same EPS is being discounted at a higher rate. So the
Very true.
market is now asking for 46 rupees or 50 rupees.
Correct.
So whether I buy it for 26 rupees, so when it was discounting 12 times at 24, you didn't want to buy. At
Hmm.
46, you're asking whether to buy. This is psychology.
Very true. Human psychology.
So, so whether you buy it at a PE of 12 or whether you buy it at a TPE of 50 is the decision that you have to make. Now let's take Asian Paints.
Hmm.
Great company, great brand.
Hmm.
You take away that extra 25% they got because of a corporate rebate, tax
Very
rebate.
true. Hmm.
If I take it out and average it, the profits are going at 10 to 12%.
Hmm.
Why should I
Year on
pay
year.
72 year on
Hmm.
year? So
Hmm.
2 rupees in 20 years will become 16 rupees.
Hmm.
But today market is asking me to buy it for 144 rupees. So if I pay 144 rupees today for a 2 rupee earning, I'm going to get 320 rupees.
True.
So whether I pay 144 or whether I pay 25 is the PE ratio.
Correct. There's a very fundamental analysis everyone must do before venturing into buying any company.
And most of my success has come because I
Hmm.
bought stocks at
Low at a low value, at a
low
discounted value.
value. Now, people who make fun for they are making fun of me for Manappuram. My initial lot, I bought Manappuram at 32 rupees.
Yes. I remember.
I bought it for 32 rupees. It went as high as 180. I didn't sell it.
No, I didn't.
So now 7.2 now. So 2 into 7 point, if the earnings is 2 rupees
Hmm.
and it is at 7.2 in vechiko, that means I
Hmm.
am buying for 14 rupees.
Hmm.
And if it grows at 10% profits, it has grown. And what is suppose let us assume it grows at 10%. I'll
Hmm.
make 16 rupees at the end
Correct.
of 20 years. So 16 become into 20 times earnings is 340 rupees.
Correct.
16,
And then selling it.
16, 320 and today it is selling at 14 rupees.
Yes.
Okay. Then you assume it doesn't grow at 10%, it will grow at 5%.
Hmm.
The growth of the profits is going to be 5%.
Hmm.
Then it will become 8 rupees.
Very true.
16 becomes 8. So
Hmm.
16 rupees earnings comes down to 8 rupees
Yes. By half.
by half. But 8 into 20 is 160. So I
Correct.
paid 14 rupees, I got 160 rupees, which is also a 10 bagger.
Yes.
Now, every quarter it is giving 75 paisa dividend.
Very true.
So I'm getting 2.5 rupees every year back.
Yes. Yes.
Okay.
Aside from the other
So,
calculations you did.
yeah. So for 10 years, what will I get?
2.5 rupees into 10 means 25
No, no, 20 years. We are taking 20 years. I'm
or
again
20 years.
making same. So I'll get 50 rupees.
Yes. That's
So I
assuming
gave,
there's likelihood they'll pay you more, no, as the years go by.
assume they don't pay me. Assume the worst case. It's
Okay.
5% growth. 8 rupees is my cost. I'm
Hmm.
buying it for 8 rupees is the EPS. 20 times that is 160 rupees. 14
Hmm.
into 20 is 160.
Hmm.
14 becomes 160. And I
Hmm.
have got 2 rupees 50 paisa into 20, 50 rupees. So
Hmm.
whatever 14 rupees I gave, I got 50 rupees.
Correct.
And if it trades at 20 times, I can sell it at 160.
Correct.
But you say, no, no, it won't trade at 160. It will trade only at 10 times earnings. Even then, 14 rupees has become 80 rupees and I have got
Yes.
my money back.
Very true. And this is only for one share.
This is only for one share. So I'm saying my margin of safety I'm calculating.
Correct.
So if it drops further, as it drops further, the margin of safety is better for me.
True. But all these calculations we must get into only after we vet the company and the owner of the company, like you told us last time.
Yeah, that is the way it is. But that is fundamental. If I do not know the owner, then there's no point doing the business.
Correct. So these calculations one should not do just because the numbers look interesting,
No, no, no,
because
no,
these
not
numbers
at
can
all.
be fudged.
These numbers can be fudged. In this case, Reserve Bank is watching it, so therefore it cannot be fudged.
Hmm.
So
Very
you have
true.
to look at your checks and balances.
Correct. So this is a very interesting analysis which Anand has given us on price to earnings today. I think the next video we will look into the other three things which we were talking about, which is the price to free cash flow, price to book value, and earnings before tax.
Yeah.
Thank you,
Thank you
Anand.
very much. So thank you very much for watching this video. If you like this video, hit the like button of this video, press the subscribe button and turn on the bell notification. If you do not turn on the bell notification, you will not be notified before we put out a video.
Correct.
Please share this video with your friends and relatives and persuade them to take a look. Once again, I thank you for your support for Be Rich. It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.